Hello, good day everyone. This is Kelvin Ting, and today I'll be talking about the full Flexi loan that we have in Malaysia. Alright, let's get started. So, when we buy a house, we always think about this. There are so many types of loan, You have the basic term loan, you have the semi-flexi loan, and you have the full flexi loan. Actually, I would highly recommend anyone to take the full flexi loan. So today I'll be talking about full flexi loan. After this, you will know exactly what a full flexi loan is, and you will know how it does, how it actually works, because I will give you a real example. So after that, you will also know how to fully utilize this full flexi loan in your everyday life. Alright, so first of all, when you take a full flexi loan, a current account will be opened for you that is linked together with a full flexi loan. Okay, so what does this mean? This means that as a borrower, you can deposit money into the current account to lower down the interest charged to you, and therefore to reduce the monthly installment for you. So this one is actually very good for you to save money. Instead of putting your money in the savings account, it's better for you to put in this current account. Later we will have one example so that you will understand. So next, the deposit in this current account that you put in, right? You can withdraw it at any time. Anytime you wish, you can withdraw it. You can withdraw everything out from the current account. But there's one thing. If you withdraw everything from the current account, your monthly installment will go back to the normal amount. Okay, so all this sounds very complicated, so let's look at an example of how this actually works. Okay, for example, you have a housing loan amount of 500,000. You took it from the bank, and let's say your annual interest rate is 4.8%, and your normal monthly installment is 2,500 ringgit. Let's say you took the full flexi loan. Okay, so if we look at the 2,500 ringgit, right? So we can break it down into the interest and the principal amount. So the interest part is very easy to calculate. You just take your loan amount, multiply by 4.8%, your annual interest rate, you divide it by 12, because there's 12 months in 1 year. So for the first month, you will be paying 2,000 ringgit for the interest alone. I'm sorry. So when you pay 2,500 ringgit a month, you are only reducing the principal amount by 500 ringgit. So after the first month, your principal will be 499,500 ringgit after the first month. Okay, so I will only talk about the first month for ease of explanation. Okay, so this is the example when you have no money in your current account. Okay, so next we move on to this next example. Let's say in this example still 500,000, 4.8%, and your normal monthly installment is 2,500 ringgit. So let's say you deposit 100,000 in your current account. Okay, the interest rate will be calculated based on 400,000 instead of based on 500,000. Why? Because you put in 100,000 into the bank account. So if you put in 200,000, it will be calculated based on 300,000. So the interest rate is actually, instead of 500,000 times 4.8%, you will have 400,000 times 4.8% divided by 12 months. So now your interest is only 1,600 ringgit instead of 2,000 ringgit previously. Your principal payment amount is still the same at 500 ringgit. You add 500 ringgit to 1,600, your monthly installment has been reduced to 2,100 from previously 2,500, just because you have 100,000 ringgit inside the current account. So if we draw a conclusion from this, right? If you deposit 500,000 ringgit into the current account, your interest rate will become zero, because 500,000 minus 500,000 is zero already. So your monthly installment will be reduced to 500 ringgit, from 2,500 reduced to 500 ringgit. But of course, you need to have 500,000 cash. That only works, okay? So, in conclusion, what does this mean when you put 500,000 there? Some people might argue, maybe you can put the 500,000 into your, to make money, to put in other investment with the 500,000 instead of putting the 500,000 in the current account. So basically, it all depends on how much you earn in that investment that you have, and also how reliable it is. So in other words, how do you make use of the full Flexi loan when you have it? So that's basically you don't need to open a fixed deposit account anymore. Why? Because a fixed deposit interest rate is always lower than your housing loan interest rate. Let's say your housing loan interest rate, you can get it at 4.3, 4.4, 4.5%, for example. I think the best rate now the bank can offer is around there. But for fixed deposit, even when you get it at a special promotion, the highest you can get is 4.2% for fixed deposit. So instead of earning 4.2%, it is actually better for you to save 4.5% or 4.8%, somewhere around there. So it's better for you to save more than to earn less. So that's the principle. And furthermore, when you have fixed deposit, if you got it at a special discount at 4.2%, maybe they will limit you at 7-month term or 13-month term. There's no flexibility. So that is why you don't need to use a fixed deposit account anymore once you have a full Flexi loan, a home loan. So basically, when you have this, you should put all your money into the current account for you to save money and reduce the interest charge on your housing loan. Instead of putting it in a savings account, you should put everything in this current account. So when would you need to take money out from this current account, or when should you? First of all, of course, when you have accidents, or a touch wood, when you got accidents, or when you really need to use money, then you use the money, then you can withdraw it out from the current account. But let's put that aside for a while. Let's talk about investment from investment point of view. So basically, the current account lets you save 4.8%. In my example just now, I put money there, I will save 4.8%. So whenever I find an investment that gives me better than 4.8% return, then it's theoretically better for me to take the money from the current account and put it in the new investment that helps me earn more than 4.8%. Let's say I have this mutual fund. This mutual fund, I know it will help me earn 15%, for example. I'm very confident can earn 10, let's say 10%. So earning 10% is better than saving 4.8%. So in that case, you can consider whether you want to put it there or not. Or maybe you have some business ideas in future, you want to run your own business, you are confident it can give you a very good return, then you can consider it. So this is the situation where you can take money out from the current account, and some examples where you don't need a fixed deposit account anymore. Alright, so but all in all, at the end of the day, hopefully all this having the current account to help you save money, hopefully it encourages you to save money rather than simply spending it elsewhere on some unnecessary things. Okay, so I hope this one can explain very well to you how exactly a full Flexi housing loan works, because when you go to the bank, none of them will explain it to you very clearly on how it works. So I thank you for your time. So guys, be smart with your money. I wish you all well. My name is Kelvin Ting. Have a good day.